determine whether or not if my bear stance is still viable or not. I said that in analysis. I said it in Trader Roundup when I was questioned about this wick and how these candlesticks were. It could go up and hit that. And I would have to see if if that bearishness is still warranted there. But look what it did. It hit there, and then it opened up at 6 o'clock and then gave up the ghost immediately. And this is all on the heels of a NVIDIA earnings. And NVIDIA earnings, many times I've seen lately, they pump it, but it can't hold those gains. It gives it back. So it's becoming a Judas swing. So you do with that with what you will. So we didn't see any follow through through that. Once it just hit it, boom, and then we're back. So, but now we're on Friday. So by having Friday, and the characteristics and things that we usually see on Friday is what? TGIF. What if TGIF, which is, thank God it's Friday, where it usually goes back 20 to 30% of the weekly range. What happens if it's a consolidation week? What's it likely to do? Go back to the middle of the range. 40% mark from the highest high down to the lowest low. 40% of that is a retracement, higher if it's moved lower in the most recent candlesticks. In other words, Wednesday, Thursday, or Friday, or Thursday, Friday, or just Friday. If it's done that much of a run, it can retrace back and consume 40% of the weekly range and go back to the middle of the range. Why 40, not 30, not 20? Because it's consolidation, so it can be a little bit more exaggerated, getting back to the middle or the median. Okay, so that's where weekly profiles come in. I know you're getting all this stuff for free. Man, I'm such a guy. This guy ICT, I'm telling you, man, you're so cool, ICT. You didn't even charge me anything. You want to sip? It's actually really good orange juice, or it's maybe because I haven't drank it from somewhere now. But first presented fair value gap. Let's go back to narrative. It's Friday. It presents it. People see this as this is a shift in market structure. It's time to go long. Why? What's this? Slip that right here. You have sell side liquidity right there. Relative equal lows, too clean, too perfect. Even though that first specific fair value gap is there, even though we had the short-term buy taken out here, what's the long-term bias? Bearish. These lows here, if the market's going to go higher on TGIF, consolidation week, it's going to pull back 40% level of the weekly range. That's the minimum, by the way. This right here, what's the extreme, you're probably asking? Well, if that's the minimum, what's the extreme? 60% of the range. So you better be writing this stuff down, folks. Don't wait for the books, because I'm telling it to you right now. I told you, everything's going to be on the YouTube channel. The book is just simply going to put it in a way where you can go right to the information. Well, that's it, I'm not going to watch your videos. Okay, do it that way then. But you still won't be the dynamic of having it shown to you over charts, because I can only rather talk about it in one example in the book. If I put the amount of examples or theory in play, in action, I'd have a whole book, 350 pages or more, with just one conceptual idea, and never really still scratch the surface of how that would be implemented in other things. You see how vast this is? So you still have to come back to this compendium to get a further treatment of it. This is the encyclopedia of ICT, this YouTube channel. But the book is just simply going to be a way for you to say, okay, how can I go in and use this information right now based on zero understanding how I can then relate to the YouTube channel. There it is. So that's kind of like what they're going to hopefully accomplish. And I may not be successful in it because I'm not really, I never really wrote a book, that would be a baseline to evaluate that. But I've made a whole lot of audiobooks, right, with all these videos and such. So they took the sell side here. Now, bring in the factor of TGIF during consolidation week. It doesn't matter what the buy says. We're going into a weekend. What are we anticipating right now? What climate are we in? Black swan, something big, something geopolitical is coming. We have all that military hardware over there in the Middle East. You know what was coming. You've been expecting it for months now. You've been really expecting it in the last few weeks. And then when Yahoo come over here and visited right away and hurried up and went back home, that was like the green light that they were going to be doing this weekend. There's no point in talking about it. Everybody kind of expected it. So you know what? Uncertainty. So nobody wants to be in a position. So they're not going to sink the market crazily lower. They're not going to rally the market crazily higher. What benefit is it for the algorithm to do that? There won't be enough participants to lay down the groundwork for a future run. So they're just going to go back in the middle of the range for the week, for Friday, and just let the cards play out on Sunday's opening. How much of an intensity do we see over the Middle East, and what response do we have? Is it just localized there, or do we start seeing things pop off over here in the States? So that's what we're blending things that we have no control over. You might think that I don't care about that, it has nothing to do with me. I'm in a peaceful part of the world. Okay, but if you're trading in the financial markets, you have to be aware of this because it's going to impact us as traders. It has an impact in sentiment. It has an impact on the money flow. It has an impact on risk. And also the severity and degree of volatility. And those are factors that I can't, and I've struggled with 2 chapters to try to and I'm not satisfied. Like I'm reluctant to include them in volume 2 and 3 because they don't do a good enough. Let's say it this way. As a writer, I'm not capable of communicating in a way where even when I read it, I'm satisfied by it. And I know what I'm talking about regarding it, and I still can't communicate it effectively. Where I know if a reader reads it, they'll feel, I know what he means by that, and that's useful. So those are 2 chapters that may not actually be in there, but they'll be in lots of rants, and they have been in lots of rants. Some people disagree with what I say in the rants pertain to geopolitical things. Other people say, wow, you're right on the money, and I want to hear more of it. But I still don't feel satisfied in the actual text written format of it. And so they may not actually appear in books. So just know that that's why we have Twitter spaces, and that's why we have these boring parts in the videos where it doesn't feel like it means anything to you, it's useful to you. But over time, as you mature as a trader, you'll see that these things actually are important and they are impactful to your trading, whether you are in a peaceful part of the world or what does it do to validate you getting long? Whether it be, what does it do to validate you getting long? Whether it be an inversion fair value, in other words, if this was a down close candle, city, when price goes back above it, that would be inversion. It's not inverted. This is inversion. It's changing its character from that of what would normally be bullish, but it moved through it here. Then we ride above it. Once it leaves it like this, this range becomes reclaimed. If this was a down close candle, it would be an inversion fair value gap. So up close candles, when we trade up to them, after trading down through them, we have to rely on time and patience to take us up above it. And then once it does that, we want to see it expect the upper half. Can it lay a candlestick wick down in here and even poke 1 tick or maybe 2 ticks below it? Yes. If it does, while that candle's forming, we have to wait and see, does that body get right back in the upper half? You can't risk trading in this environment that we're in right now doing that. In high resistance liquidity run conditions, don't trade like that. Low resistance liquidity run conditions, I am doing that 90% of the time. I'm scaling in, I'm adding, and I'll add one more. If it pokes its head outside the bottom end of it and I'm bullish, in low resistance liquidity conditions, I will still buy that because I know what I'm in, I know what I'm looking for. But in high resistance liquidity run conditions, the likelihood of you being profitable doing that, because of the volatility being so high right now, if we can get back above that orange inverted break, I told you before 9 o'clock yesterday morning. Before 9 o'clock in the morning, I was telling you about that right there. You know, I said it can go up to that, and if it goes above it, then it may act as a run or a discount array to get to this liquidity. And you just don't do